today's sell-off, which could, after all, just be a correction after 4 months of unbelievable gains. But let's just put that correction stuff aside. Does this mean that the consumer is so much stronger, Gary Schilling notwithstanding, and I'm going to preempt Doug Cass, and therefore the Federal Reserve will, A, not lower rates, and B, not raise rates? Is that part of this stock market move today?
Yep. Yeah, that's the total story. The story here is that the economy just refuses to roll over and die, and the reality remains that the next interest rate move is going to be higher. And that's what today was all about.
How much higher and when higher?
It's probably not going to happen until the end of the first quarter of next year, but I think we're going to start moving up in 25 basis point hunks. We'll probably get to 6% and pause and look around and see what's left. But that's where we're headed. Inflation is not going down fast enough.
10-year yields fell a couple basis points now, just above 450. I believe the closing quote today was 453. I believe they dropped 2 or 3 basis points. I like to use the long bond as my ultimate economic proxy. Long bond kind of says what Kimberly said. You know, sales were okay, not unbelievable, and doesn't seem worried about the Fed.
Well, long bonds are living in the most fabulous, extravagant form of denial we have seen since NASDAQ 5000. This is Bondac 5000. And by this time, 6 months from now, there is going to be a smoking crater in the middle of Wall Street with bonds written right in the middle of it.
So far we've heard
my words.
But Don Luskin, take us out on this real fast. On this dollar point, last week, you saw some of these signs on Wednesday, Thursday holiday, then again on Friday. The Treasury Department, looking at some review board, is now thinking about labeling China a currency manipulator. And I think we can agree, you and I, if there's one thing the markets do not want, it is a full-fledged American-Sino trade war, which would be a financial and economic disaster. Now, does this threat impact the market? Because stock's been going down ever since this surfaced.
Well, for one thing, the idea that we want a stronger yuan is like saying we want a weaker dollar. That is an avowed weak dollar policy. It is a devaluation policy. It is a disaster in terms of inflation. It's a disaster in terms of growth. But the real impact of getting into a trade war with China, of course, is that it just shuts down the whole globalization revolution, which has been the great source of growth in the whole world for the last 5 years. The global labor arbitrage between the West and the East has been the great engine behind the greatest story never told. You stopped that engine, and we hit stall speed really fast.
This is Smoot Schumer and Holy Graham. Will Treasury Secretary Henry Paulson, and incidentally, as you know, Fed Chairman Ben Bernanke is going with him to China. Is Paulson going to fall in with this cheap dollar policy?
He's there. He's there because it's the bone that they've got to throw to the populists, both in the Republican Party and in the Democratic Party.
Yeah, we're going to come back to this. The bone thrown to the populists. That's a very important point. I want to pick up on that. It is another important example of Washington to Wall Street. Bond's going to get to 3%?
No, I think that's absolutely ridiculous. Maybe the inflation premium in the bond will get to 3%. That'll explain half of the 6% yield that we're going to be seeing 6 months from now.
6%?
That's the only 3% you're going to see.
Hey, you want to short some bonds to me?
Wait a second.
How many you want to do?
Yeah, done deal.
Want to short some to me?
Deal.
You name your number.
Well, wait a second. Don, if you got a 6% bond, okay, fair enough. That's your view. What does that do to the stock market if you are right? That's a huge hickey for stocks, is it not?
That is going to be a huge hickey for stocks. I think, I'm looking for the top here. We're not there yet. I'm bullish for now, but sometime between now and 6 months from now, I'm looking forward to calling the top. I'm going to ring the bell. We're not there yet, but we're on our way because the next move for rates is higher.